Today on Fear and Greed, it's a massive week for the economy with inflation set to drop below 3% for the first time in 3.5 years. The housing market slows as Sydney joins Melbourne among the weakest cities, and Commonwealth Bank pushes to get people back in the office. All that plus plenty of market news and a great story about the price of tickets at the World Series of Baseball. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 28th of October, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, massive week for the local economy with headline inflation. I don't mean to overstate it, Sean, but it is it's a big week with headline inflation expected to have finally fallen within the RBA's 2 to 3% range. But that's not going to be enough, is it, to convince the central bank to cut rates in, what are we, 8 days' time?
Afraid not. The Australian Bureau of Statistics this week releases the CPI figures, the Consumer Price Index figures. They'll reflect the government energy rebates, the $3,000 that the government handed out to everyone, $750 per quarter to take off your energy bill. That means the headline inflation rate will fall back to 2 to 3%. Energy has been a big reason why inflation has been so strong in the past couple of years. It'll get back to that 2 to 3% for the first time in 3.5 years. That's the headline rate. Problem is, the Reserve Bank looked at the underlying rate, what they called the trimmed mean rate. And the Governor of the Reserve Bank, Michelle Bullock's already said that they'll look through those $3,000 rebates. The trimmed mean rate is more likely to be around 3.5%. Now, what we do know is that Michelle Bullock wants that rate to be sustainably on the path to 2 to 3%. 1 month or 1 quarter of 3.5% is not a sustainable trend. When the rebate eventually expires, the headline rate will throw back to about 3.5%. So 3.5% is really a better reading. The upshot of all that, the Reserve Bank won't do anything when it meets next week. Now, bond markets have priced in a 30% chance of a cut in December, 70% chance in February, 100% chance that there will be a cut by May next year. If you think about it, this is the September quarter CPI. The December quarter CPI will come out in January. 2 in a row. So if we had a really good number, if we had 3.3, 3.4 this week, or even less, definitely. For the trimmed mean, same if we got that the following quarter. So next January, we had a 3.1, 3.2. So it's trending down. Maybe you get a rate cut, but I still think it's closer to the middle of next year before we can actually confidently say there will be a rate cut. The other data out this week, which is really interesting, is the US inflation figures, because that economy, inflation seemed to be falling back towards sort of that 2% target rate, which they like, but it seems to have stalled a bit, and the US economy is actually quite strong at the moment. So when it comes to rates and inflation, this is the week for economists and for everyone out there.
So it's fair to say it is a massive week.
Yeah, you're right. You did not misspeak, Michael.
Good. And it's also a very big week. Well, it has been a very big week for the housing market, hasn't it, Sean? With more than 3,000 homes going under the hammer. The preliminary clearance rate across the country fell to 66.8%.
So this is the week we've sort of been waiting for. This was the time where it was the second busiest week of the year in terms of house sales. The week before Easter was bigger. What we found out is that the Melbourne clearance rate, the preliminary clearance rate for Melbourne, according to CoreLogic, was 68.5%. Not bad, in line with what Melbourne's been doing. For Sydney, it was just 64.5%. That's down from 70.5%. 6 percentage points. That is a big drop. Second lowest of the year. Later this week, we'll get monthly house price data, but it just seems that Sydney is stalling. Melbourne has stalled. In fact, Melbourne prices over the past year have actually gone backwards slightly, along with Hobart. Looks like Sydney they won't go backwards over the last 12 months, but they're at a period where you suspect they're not going to be rising too much. Among the other cities, Brisbane came in at 58%, Adelaide 74%, ACT 67%. The other thing worth noting, this number this week was 66.8%, the preliminary clearance rate. Well, what we found out last week when the number came in at 60 was higher than that, 67.4%. The final clearance rate dropped way down to 58.2%. So we're talking 66.8. It's probably likely to come down to 57, 58%. That is not a strong housing market, Michael.
No, certainly not. And the reason for that is often, you've explained that before, isn't it? That agents will often kind of rush to report successful sales.
The good news.
Yeah. But then the unsuccessful ones, the auctions that have been passed in or pulled from the market or something, they kind of trickle in over a few days. So we often see that adjustment. And in this particular case, it was a long way down.
Yeah, and I mean, what you find, the core logic data is what we use, but same for Domain and others. What you find is that when they don't have a lot of results, the preliminary clearance rate inevitably falls more to get the final clearance rate than if they do have a lot of results.
My favourite part of this whole story was how many times you had to say the word preliminary.
Oh my God, it's a shocker. I find it really hard. Preliminary. It's okay if you say it slowly.
Yeah. And look, you said it, 7 times, and 6 out of the 7 you nailed, and it was just on that last one. Yep. I'm like, yeah, got him. Yep, managed to lure you into saying it one more time. Anyway, Sean, we've got a lot more that we still need to cover. We'll be back in a moment with the rest of the day's business news. Sean, everyone seemed to be claiming victory after the Queensland election. The Liberal National Party won, and the new Premier is David Crisafulli, but Labor seemed relatively happy as well.
Yeah, so I think a few weeks back, ALP, the Labor Party, was expected to get trounced, but they didn't. So that's kind of the good news. Sure, they lost power, but Stephen Miles, he's going to keep his job. He's still going to be the leader of the Labor Party. The fact that they weren't trounced, they're kind of happy about. In the end, the Liberal National Party won 49 seats to the ALP's 34. Bob Katter's party won 3. The Independent won 1. 6 still too close to call. Prime Minister Anthony Albanese was out quickly yesterday crowing about the loss. Yes, crowing about the loss to Labor, saying the Greens' loss of seats sent a message to the Greens. Now, the Greens only had 2 seats. They lost one of them. The other one looks like the Greens will retain it, though it is still too close to call on that one. Mr. Crisafulli said the vote count exceeded his expectation and his elevation to the state's top job was humbling. As I mentioned a moment ago, his opponent in the Labor Party will be the former Premier, Stephen Miles.
You mentioned Anthony Albanese there. Now, the Prime Minister is under fire, Sean, over his relationship with Qantas and former CEO Alan Joyce, with a new book saying the PM was provided with dozens of free flight upgrades.
The book by former Australian Financial Review columnist Joe Aston infers that the two were too close, and it lists at least 22 free upgrades from economy tickets dating back to 2009. Now, Mr. Albanese was the Shadow Transport Minister and the Transport Minister, and no doubt he was close to Qantas in those jobs. Mr. Albanese said recently, another fact that came out was that his son became a member of the Chairman's Lounge. Now, the Chairman's Lounge is something that only very few get access to. Politicians generally do, CEOs, those types of people. Mr. Albanese's son got access to it, which is unusual. Now, Mr. Albanese said that his son was his +1 for his Chairman's Lounge. That's okay, but his partner also got invited, so that doesn't hold water too well on that one. Anyway, Mr. Albanese said yesterday, he said he declared all the upgrades. One thing about this story, which Joe Aston himself says, is that politicians don't declare that they've been upgraded from economy to business. But Anthony Albanese made a point of doing that, and I think that's what the Prime Minister was saying yesterday. Hold on, don't blame me if I'm actually doing the right thing. The pointy end of this, though, is the government blocked Qatar Airways flying more routes into Australia. And the inference is that Mr. Albanese's relationship with then CEO Alan Joyce had a role in that. I'm not saying that's the case, but that's definitely the inference from Nine.
Just staying with Qantas, Sean, the national carrier held its AGM on Friday in Hobart and said that its low-cost subsidiary Jetstar is outperforming expectations domestically.
Yes, so management said trading's in line with expectations. Domestic revenue per available seat kilometre. Is that a cracking measure of profit? Revenue per available seat kilometre. It's expected to rise by, I'm not going to even try and get my head around it.
It's just so opaque, isn't it, as to what it really actually means. No one really gets that except for airline analysts, right?
Yeah. Well, it's up 4%. There you go. That's the good news.
There we go. That's good news.
Jetstar's doing well, but international revenue is falling as more competitors return to Australia. CEO Vanessa Hudson said she isn't against Qatar buying 25% of Virgin. That's a proposal that's on the table at the moment. Qantas will invest in new aircraft, $3 billion this financial year. It will also give $25 million to staff as a one-off thank you payment. Its share price was up 1.5% on Friday to more than $8. It closed at $8.03 in the end, which is a record high. Thing is, the company, the airline, reckons that it can grow capacity by 10% this financial year. That's enough, certainly, to help the share price. The new chair, John Mullen, said there was a focus on customer service. Of course, there was nothing like the protest vote. Last year, they had the 83% protest vote over its executive pay scheme. That all went through okay this year.
Sean, there was plenty of corporate news around late last week. Can you give us three highlights?
3 highlights. Well, this one doesn't count, the first one, because I better tell you what the market closed at. It was like flow.
Okay.
Flow.
Fine.
It was flowing, but it was flat. 8,211 points on Friday. For the week, it was down nearly 1%. So I've got to pick 3.
Three only.
Okay, so Newmont, the gold stock,
Mm-hmm.
share price fell more than 10% after a September quarter earnings miss.
Yep, that's a good one.
ResMed announced an 11% jump in revenue in the September quarter thanks to high demand for its sleep devices and masks portfolio. Another interesting one was Metcash. Its share price fell after flagging more cost-cutting measures in response to weak trading in its hardware unit.
Okay, they are 3 good highlights. I will grant you an extension as well, though, to talk about mineral resources and WiseTech Global, because we can't talk about corporate news from last week without the corporate governance stocks.
No, sorry. I should have gone straight to these. So MinRes fell sharply on Friday on media reports. Managing Director Chris Ellison and other board members allegedly purchased mining equipment from the company at significant discounts to market rates. Over the weekend, there were reports that Aussie Super had sold down its interests in mineral resources. That was the bad news in the corporate governance stocks. The good news, at least if you're a WiseTech shareholder, its share price jumped by as much as 16% on Friday following the announcement that founder and long-term CEO Richard White would step down. However, it's like a Clayton stepping down, because if you actually read the details, I'm not so sure. Now, Mr. White, lots of accusations and allegations about involving his personal life. He basically he stepped down, he'll take a brief break before taking up, and I quote, a full-time, long-term consulting role with the company focused on product and business development. He'll still be paid $1 million annual salary. He will report to the chair and board, not the CEO. So he won't be CEO, but he'll still have a big role. I don't know, Michael. Does that mean he's stepping down?
Oh, it sounds a little bit mysterious. The thing that gets me then, so the share price jump, was that because then he is still going to have an active role with the company, and obviously investors like that because he has been that company really for so long, and I suppose also it gives him a bit of a circuit breaker because he has effectively stood down.
Yeah, that is exactly it. He's not leaving the company. That's why investors are excited because he's not leaving the company, but as you say, he is the company. So that's why it was sold down, and sort of over the last week until Friday. But he's hanging around, but won't be CEO.
Yeah, but by stepping down from CEO, he's given them that circuit breaker and maybe moves it on from the front pages for now. Maybe.
We'll see.
Sean, interesting conversation coming up after the show. You've got an interview with Roger Montgomery from Montgomery Investment Management.
So it's all about artificial investment stocks. But what I love about this conversation is that Roger tempers the enthusiasm just a bit. He puts the rise of AI in a historical perspective when this sort of thing has happened before. And he uses this great example about airlines. I can't quite remember the number, but since the airlines have been flying, in total, they've made a grand total. I think it's $20 billion, he says, or thereabouts. The point being that was a revolution, flight and passenger flight, but people haven't made money out of it. So he compares AI to that and talks about how you might be able to make money from AI or not. It just sort of tempers that whole AI discussion. I urge everyone to listen to this one.
Yeah, indeed. And Montgomery Investment Management, a great supporter of fear and greed. I mentioned Commonwealth Bank at the top of the show, Sean. They've threatened to cut bonuses and discipline workers if they repeatedly break the company's return to the office rules. They're getting serious.
They sure are. The nation's largest bank sent an email to staff saying it will review office attendance monthly. According to a story in the Fin Review, there'll be 2 written warnings and then further action. The email said the action will impact on variable remuneration and performance ratings. Now, CommBank isn't particularly onerous in terms of staff time. Since July last year, it's required staff in the office at least 50% of the time. Now it's saying if you break those rules, well, you might not get your bonus payment and your rating may actually be hit. Not alone, Origin Energy's done something similar, so too Suncorp and ANZ, but clearly a lot of these big organisations are really struggling to get people back into the office.
It's a cracker of a story, that one. Turning to international news now, Sean. Iran's military has indicated that Tehran will not retaliate immediately after Israel launched airstrikes on the Islamic Republic, escalating the conflict between the regional foes.
The strikes over the weekend triggered fears of an all-out war in the Middle East. Israeli forces launched 3 waves of attacks, saying they had struck military facilities, including missile manufacturing plants and air defences. It was in retaliation for the barrage Iran fired at Israel 3 weeks ago. Interestingly, Iran sought to play down the impact of the strikes, and rather than vowing revenge, in a statement, it said Iran's emphasis was on supporting a ceasefire in Gaza and Lebanon, where Israeli forces are fighting Hamas and Hezbollah, respectively, according to the Financial Times. What's interesting there is it wasn't angry about the retaliation. It actually talked about a ceasefire. So there's some hope there. Some hope, yeah. Sean, the US presidential election isn't the only election that's going on at the moment. Japanese voters went to the polls yesterday to decide whether to keep the somewhat scandal-tainted Liberal Democratic Party in power. Yeah, so the LDP is expected to win most votes, but may lose its overall majority in the lower house. That means it might be looking for a coalition partner. The current Prime Minister, Shigeru Ishiba, has only been in the job for a few weeks. And a loss of the absolute majority would sort of end the era, the Shinzo Abe era, the late Prime Minister. So it's kind of very interesting to see what ends up there. The LDP's probably still likely to maintain power.
Finally, Sean, I mentioned this one at the top of the show. I've been waiting for this. In Major League Baseball, arguably the 2 most famous teams are the New York Yankees and the LA Dodgers. If you asked kind of Australians kind of what teams, they would probably be able to name those 2. They faced off over the weekend in the World Series with the average ticket price on the secondary market, $1,700 US.
Yeah, so what's that, 2,600 Aussie? That's the average ticket price?
The average, so it would go much, much higher than that.
Now, if you don't follow Major League Baseball, this is like the grand final series. It's the best of 7. 2 of the biggest stars of the game, Aaron Judge plays for the Yankees, Shohei Ohtani, the billion-dollar baseballer from Japan. He plays for the Dodgers. In fact, the Dodgers used to be in Brooklyn, and so it was sort of across the water there, New York versus Brooklyn. Now the Dodgers are in LA. It is kind of the big event. They haven't faced off in 43 years or so. Tonight's game, tomorrow night, I think the game is in the US, is Game 3 at Yankee Stadium. They're the most expensive prices. The average ticket price, nearly 2,000 US, 3,000 Aussie. Standing room only tickets, 1,500 US, 2,300 Aussie. Behind the home plate or above the Yankees dugout, most popular spots, more than $20,000 for a seat. The only other thing I'd like to say about this, I am a big Yankees fan, have been since I lived there. I went to a lot of Yankees games. My neighbour down the road, because I worked odd hours, in the middle of the day, he'd always knock on the door, and he's a member of Yankee Stadium, and he always had 2 tickets, and he said, "You coming?" And, yep. So I went along to a lot of games. Well, game 1, those, what do I say, dodgy Dodgers, they hit a home run. How do I do it? In extra time, they hit a home run, so they won. Game 2, they won. Come on, Yanks. Come on.
Aren't you supposed to be unbiased, Sean?
Nah, not when it comes to the Yankees. New York teams, I'm all for them.
Fair enough. There we go. All right. Up next is Fear and Greed, the week ahead, featuring our resident economist, Stephen Koukoulas, on the very, very big week coming up for the economy. And then following that, you will find Roger Montgomery from Montgomery Investment Management talking all about AI. They are both coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 28th of October, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.